Here's the crude oil. We rolled to D or SEP, excuse me. Um, so it's a little tricky in how you read this, but again, this chart is just a sad sack too. I mean, it's typical. Crude oil or anything. Again, you got to remember, you get up in these levels, $90 out for the deferred in particular. There's going to be guys turning on some abandoned wells. It takes a little process. It's not instantaneous. Got to get them inspected and check everything. It costs a little money, um, but at these price levels, it's well worth it for them to pump out more of a minor amount. When it's at 50 bucks, it ain't worth it, right? So, but you get up here to 80 to 100, it makes more sense. You're going to get these wells hooked back up, and that takes time, right? So, probably didn't do it here because they have it. It takes a process, a couple months anyway. So that puts you out into here. So I would assume be a little careful of the bear. Again, system is not short yet. We got our stop right here on the SEP. We kind of bought it on the roll, right? Because I got out of the July, I don't know, 80, what does it say? 89.59, 89.59. So we bought it right in here on the close on the 22nd, I believe. Yeah, 22nd. So, and we got out of the July on the 22nd. Again, just to make it some type of official deal, right? Made 34 whopping $100. So you can see, we're up on this market obviously because we caught the pop. Here's nat gas. We talked about making new lows. Again, if you were forced, I would have probably bought this personally. Of course, if you ever follow me, I like the traps, especially when you have bull traps. I assume then you're going to have a bear trap. We had from this high to this high was about 14 bars. This one was about 19 bars. So 14 was right here. So it kind of makes sense a little. I mean, it's not exact, and normally it isn't, but it makes sense a little bit that this trap had some time zone behind it, not just it looks appropriate for the high, right? Now, what it does from here, I don't know. I would have probably already traded out of it. I assume I'm going to get stopped out. We do have a little profit. We got short here. And if you did buy it down here, this is the kind of a pivoty area. You might be able to run some stops as a projection zone. Oh, for Christ's sakes, I went too far. Oh well. Here's the E-mini S&P. I'll split it up when I edit the video, I guess. Here's, I've done this for so long, I can't change. We bought the S&P down here. We sold it here, so we had a little loser, but that turned into this monster bull. It's a little interesting to me that the S&P, which is an index, right, of all the S&P stocks, it's on its highs. They have a lot of little stuff you never heard of. Now my index is on its low, which is these, uh, you know, so again, the spread between the commodities and stocks are definitely on a widening spread, right? If that makes sense. So people are buying stocks, getting out of commodities. However you want to classify that. So it makes sense low, right? Trump's protects the stock market a little more than the commodities. Farmers do get a lot of free money out there. The bigger get bigger, and the smaller get smaller. Sad part of the way government handles their business. It's not fair, I don't think, but it is what it is. It's been that way forever. I've been trading for four decades. In the 40 years, it's always been that way. From all the bailouts and I just think there's still some litigation from the early 90s yet. Anyway, here's the euro. Getting that pivot we talked about, just a flared out dud. Nothing to really preach there. Let's go to gold. Again, had a pretty good run. This is the solar eclipse, right? This dotted red line. Kind of an interesting area. You can see the accumulation zone or the cardinal cross mixed with some other crosses of trend lines, all mathematical. So pretty key area, and we're having struggles here. Again, it just cannot rally. Of course, you know me if you've been listening to me. I think gold's done for a while. Margins are too high. People are talking about ounces. Buying an ounce of gold. Well, who gives a rip? I mean, that's such a small deal. I got guys back in the 70s that bought, 100-ounce gold bars and took delivery in silver at 5,000, right? So there's a lot of bars out there. Now, I can't imagine taking a 5,000-ounce bar of silver into a pawn shop and say, I want cash. But again, that's all relative. Bitcoin's kind of a similar deal, right? A lot of people bought Bitcoin dirt cheap and got out of it and made a lot of money. So no difference in silver. It's kind of a similar deal. We did go short this one, though, from the previous video. Stops are way the hell up there. Not how I would trade it. Personally, let me see. No big deal. It's too much to risk. Again, that's where options can kind of come into play a little bit. And you might have to use a smaller increment. If you can't handle the $44,000 margin, no 5,000-ounce futures, you might have to go down to a mini, which is 1,000-ounce, 1/5 the size. Still pretty freaking high for a mini. Here's the cattle. Again, kind of had a buster, and then a pretty good recovery here the last few days. So just a, April, which I used to be able to chart April only when I had instant software. I can't do that anymore. So I guess it is what it is. We're in the solar eclipse. That's the resistance. Stops way the hell up there, but you almost have to. Let me see. Bitcoin is this one. We talked about this trade, going up here, covering the close. It couldn't do it, man. This is the close on my chart, which is the March, right? And then we rolled it to June. It just couldn't get up there. And I talked about it. If it's trading like a currency, you get these sideways slow ups and a boom. That's what we did, slow up and then now boom. Bitcoin's in a little bit of a cataclysm. We know from our recent past that it only breaks about a year. 50% though. We're at 52% down off the highs to the low here. 50% right here. That's too easy. I think it's probably going to break 62, 70% down. That's the tendency. On the big bull that turns into a bear. I don't have the stats to back that up off my hand, but that's the tendency of all bull markets, right? Drop 70 to 80%, gives it all back, I guess. All right, I'm going to pull the futures up. Hang with me. Here is the crude oil. What a coil. You can see this is the nearby, so that's a spot. Now, again, I mentioned this the other day, or last video I did. This is an inside coil, right? Now let's look at the D's, the one that we're trading. Made a new high, totally different look, right? Even the projections, though, like we looked up last video, I believe it was December 2028 contract, and the high was 72. So it's telling you that area support is $72 based on that, right? So again, it makes sense. We're going to knock this low out at some point. I don't know when, right? Maybe we'll go up and make a new high first. That's not the issue. The deferred contracts are giving you a pointer. And now this trades 10 years out in the future. I don't know if you can see all these little dots, but this was kind of the old high, right? That's at 73. So it makes sense. We're going to knock this area out, maybe get to 73, 72, that kind of thing. So, and then that might reload the gun a little bit. I don't know anything about crude. I know there's a lot of lips and jaw smashing out there. None of it I believe anymore. AI world has really screwed up the real truth. The chart will tell you. Just look at it and understand it. Let's move on to nat gas. This is a daily. This is the December that we're in. We talked about making a new low because we had the traps here. I assume we're gonna have a trap here. Had a trap here. So again, natural gas is a trap in some bitch, which I like, by the way. I don't like trading that gas long term. More of a 2-week and get the frick out kind of guy in that gas. You get to see why. The tendency to hold a good rally is not until you get into late summer, even the fall, prepping right with the weather of the next year, next February. Here's the S&P. Let me look at a spot there. Let's look at a weekly. This is a nearby weekly. It's getting, the breaks are getting less and shorter and less. Let's tell you that we're accelerating. We're undervalued. So be prepared for either a super monster bull rally or a out of nowhere total hammer dog dropping the biggest move ever, right? I mean, so easy option trading for that market. Here we don't want to. Well, we might as well leave it there. You can see this is the euro, the FX. Just a big. Actually, this is a pattern you don't see too often. I kind of think this is a diamond pattern. So those are pretty obvious. When you make a new low down here, go with it. You make a new high, go with it. That's the diamond. It's a good solid pattern. We're still on a spot weekly on the gold. I want to look at a daily. D's only. Yeah, it's just a puke. I've been preaching high back in here. Didn't make sense what people were preaching. Now we have broke back, but again, you know me, I think 60, 75% is a pretty logical spot. Again, if you do the pointer, and this is the red dot at the barrel of the gun, this ain't going to be real accurate. But let's try to get it. So 33. There's 30. Again, I'm just going to do this rough. I can't quite see it all. But this would be kind of my target right here. I'm using 33%. So middle of November, which happens to be this. Again, the red one is the solar eclipse from 7-8 months ago. So the green is the current, which again did hit the resistance. It was a resistance for this pop up. So pretty interesting. Now of course we could get up to that. We could get up to this line. This is the downtrend line. I don't know if it's mathematical or not. It is important to me. Of course, 50% would be my next target down. I don't want to go there because people don't believe it anyway. Oh, market can't go down. We don't have any gold. Well, if you're out of gold, the highs are in. We're going to get hammered. That's just the nature of the beast, boys. Silver, oh, we're out of silver. Well, then we're highs are in. We're going back to 40 bucks. That's just how it's going to be. So anyway, here's you can see the silver. This is the DEES contract. Sloppy mess. You know, back here, I was saying margins aren't high enough. They did raise them to 66, back to 43. I have no idea what they are now. We had this trap, and this daggum thing went up here and took this out. So we did have a trap here. Now, this doesn't look like much, but I think I was damn near 50%. So, even though it don't look like much because of this weird-ass rally, right? You know, foaming at the mouth rally, and now it's over. Just a typical deal. I've probably witnessed in my 4 decades of trading probably 100, maybe more, bull and bear market episodes, you know, based on this greed, hope, fear. Right now, we're kind of getting in the hope mode. We haven't reached the fear mode yet. Here's the cattle, you know, another trappish market. We haven't really gone anywhere since October. We're going to be, you know, here's your power move back last year on this contract. Let me look at a spot. Now remember this chart, right? Made a new high here. Let me look at a spot. Similar deal. Now, if we had an April only, I think that would look much more bully, but I can't get it up anymore. You know, you can just obviously see some type of parallel activity going on. That was 130 Ds, only 3%. I like cattle, but I hate trading them. Here's your parallelness, right? There's your 2 levels of support that makes sense. You know, kind of the area of support that we did take out. Now we're on the backside of. So that's kind of your parallel channel. Makes sense a little bit. And you know, you draw your Andrews pitchfork and all that other crap in there. Here's the Bitcoin. This is actually they're in August. No, it says June. Oh, I'm in August. Yeah. This is the August Bitcoin. I rolled it past July because I don't like rolling it every freaking month. So it's pretty thin out here, but you can see we did bust the lows. Now let's look at the spot again. This is the nearby. You know, I'm going to assume we're going to make a new low. We've dropped 52%. Let me double check. It took 85 days, 52%, right? Now, of course, that's kind of your, to me, it's either that one or that one. That's kind of the red dot at the barrel of your gun. And again, you would have known this already, right? You'd have had this drawn in, down to 50%. Yeah, I can't get it quite to match up perfectly. There's the best I can do. That's 52%. Yeah, so here would have been my projections on time and price. I'd have been off a bit. Oh, damn it. Trying to get you, there we go. Oh, damn it. There. That was a good pointer, right? This would have been the time I'd have been looking at, the middle of May. It actually came a couple weeks later, so it missed it. But you know, the target price was 50%. Of course, the next one down will be 62, right? So we'll just finish up my thought process. That's close enough. I think that's so. That next level down would be end of June. So a month from now. You know, it doesn't, you know, it looks objectable here, but that's a still pretty good smash. But that's the 62% level. Now let's look at a weekly to see if that makes sense. It's around 50,000. Remember that. Here's the weekly, and this is our previous smash. Let's just draw that in. I'm going to duplicate it. You know that now it's the barrel. The little dot at the barrel again is right there, right? And there's your projection at 75%. Yeah, I won't worry about that. But it did go down to that next level. All right, so even though we're only at 43%, right? 79% was the actual hit. October 26. I want to keep that same time. And there's 79% if we fall the same. October 20, there we go, close enough. All right, so here's the 2 projections. This one is middle of October, and then our highs came in October 13th. So that'd be a perfect annular, right? That's what, you know, this previous break was a year long. This one will be a year long. So again, I know people don't think it can go down that far, and it sure seems like it won't. But you know, first step, we got to get through this. So a pretty good objective there. We're back at these old highs and beyond them a little bit, so that makes sense a little bit too. I like this area if you're looking to buy where people are getting stopped out, right? What I call a bear trap area. That would be down in here, right where this is. So this is kind of my, you know, spot. First, you know, tranche, stacking Bitcoin. I hate that word, but if you got multiple cash levels, this would be the first area of choice, and saving some cash just in case we do break pretty hard down into here. All right, let me see. Anything else? Oh, well, this is the this is the July no bean spread. And that was telling us a while ago that this was not going to be good. You know, new high to new low. Poof, some fundamental change. All right, let me exit out of here. Well, again, I'll be dividing this video up if I can get that done into an ag kind of sector and then into the others. I mean, I'll keep cattle down there because it's down mixed up with the silver and the Bitcoin. But again, we are short a lot, right? We're only long the crude and the S&P. That's it. The rest we're short. So heavy, typical, right? We just got done with Gann's 90-degree zone. We're feeling the after effects of that. The ones you probably need to be aware of is the S&P. You know, that's always a wild card. I'm sure the puts are dirt cheap. You can go out probably buy December puts for little or nothing as a little protection against your dividend plays or whatever you got, or the Dow puts or the Nasdaq puts. You know, you can use these options in your favor and not get out of your stocks, or buy puts in those outright markets unless you have a different slug of different ones. The indexes are a little better for that. All right, I'm going to sign off. Everybody have a careful, you know, today's Friday. Well, it's Friday now, midnight. So we're on to the last day of the week. I did this a day earlier. I hope everybody has a good weekend. Recharge your batteries.